The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Day. This is now the last day of the week for the weekly charts, but it's also the last day of the month for the monthly charts. I do want to go through a bunch of those things. Couple of things going on here. I need to show some of the charts. I need to discuss this momentarily. I thought about this a short while ago. I want to just also touch on the alternate wave counts. Why at an alternate wave counts you put there, like here I've got a D/B for the E-mini daily chart. Why would you put in an alternate count? Well, a D is a negative and a B, it could be a negative, and a B is a very positive even if there's a pullback. And in the Chapman wave methodology, your obligation, the key objective, is to be able to take you from the last letter notated onto the next letters. And if there's a question, then the question becomes, what should I do? And what should I do in the meantime? And if I got an alternate letter, it says, maybe you got your foot on the accelerator, maybe you got your foot hovering over the brake. But at that very moment, you take everything off and you say, let it just drift for a moment. The next bar should give me a huge hint as to where to go. And so I'll cover that in a moment. Let's just run numbers. Where are we? We're over there. Okay. So the Dow right now, in fact, I'm going to do it. The E-mini is down 3. No big deal, but this is the alternate count. The stochastic is at 86%. Very good. It's very good if by Wednesday it's still holding in the 80s. Not very good if over the weekend, whatever news it is, or going into Monday, Tuesday, you suddenly see a very sharp drop, or we close down quite sharply on the day today. There's a good chance we're going under 80%, and that'll be a negative. The 9-period exponential moving average of 2369 is very strong support, but very short term. It's really 2378, 77. That area is where support needs to hold. And what's really important is this weekly chart is what we're spending time on in all the different indices, because if the MACD and stochastic turn down next week, that's a failure pattern. A Chapman wave right shoulder failure didn't go above the previous high. That's a pattern we've got to look for. A close in the next 2 days into the 2400s on the E-mini is very positive. That is very short term. Is very positive. It continues the upside action. So yeah, question of the den. I'll do the technical Friday. So I do want to talk about that IWM. We'll talk about the wave counts. Let's just go on with the analysis as I see it. And I will show you again briefly. Look, here is the 2-minute chart in a slightly higher high, slightly higher lows. It's going to be very important. Why? Because at 2385.50 to 2386, you could see quite a bit more action going into the to the close. And if it fails to do that, but instead goes underneath, very short term, underneath 2380, that's a real problem. So that's the 2-minute chart. I'll quickly show you the technical Friday. I'll show you the 10-minute chart. Made a peak D in an arch formation. Took quite a dive in a shorter period of time. Left side, right side, price time match. Look, if you go from there to the high, to the right side, we came down in a quicker time frame. It says you better bounce back above the left side low bar of 2383.50. This is the E-mini 10-minute chart. Because if you don't do that, you're going to make another arch formation and be pulling back even further. Now, there are a couple of things I'm going to talk about. Let me just say, the Dow, here we go. INDU, the Dow, is down 18, having made a gray peak B. Why do I call it a gray? It's an easy, it's an easy way of, in a quick visual, saying, oh, that must mean we're underneath the previous high, and this is a retracement. I call it a retracement failure mode. Not that it can fail, but it's underneath the previous high that you've got to be real careful that you don't suddenly turn down. So 21,169, the March high, is what the Dow has to take out. It really has to take it out by this coming Wednesday, or else it's just going to continue. Now, I need to articulate something. I spoke yesterday in my interview with Tom. I've spoken about it on the show. When a certain characteristic is formed, in other words, for a sell signal to go to a sell mode, I need to see that the MACD and the stochastic are very negative and the price is closed below the 9-period moving average at least once, or it's taken time. It is a designation. It is an articulation of a particular form and a formula. It isn't a prognosis to say, now we're going to continue on the sell mode and go lower and lower and lower. In fact, most of the time, you could do that. But it's just to say that at this particular point, the Dow weekly chart has gone from a sell signal to a sell mode, and unless it takes out the previous high, which reignites the upside action, until it does that, we still have to keep studying the MACD and stochastic, because this has all the signs of a potential failure coming up. One of the reasons why, for my subscribers, we started going back into the short side this morning. Okay? We got 2 longs and we added 2 shorts. Now, what we're really looking at here is that the Dow, I'll give you the parameters right now. If by early next week the Dow is under 20,800, that's only 160 points from here. But if it closes under that, I would suggest to you that the consolidation is going to continue. If it closes above 21,090 in the next 2 days, that's very positive. I forgot to tell my subscribers this morning that the Chapman Wave Trend Gauge gave a reading that said within 2 days the E-mini should rally 9 to 11 points, which should help the cash index. Actually, I'm kind of pleased that I didn't say I usually see that, but I just missed it completely because it would have influenced my slightly negative bias here. But that's the fact. So that started off from yesterday. That includes today, and it goes through until Sunday night, Monday. We'll see what happens. In the meantime, back at the ranch, let's go on. The SPX.X is trading right now at just down 3 3/4 points. This is an alternate count PD/EY because the 23.22 low bar of the 27th of March was not taken out when the 13th of April slide concluded. That means you continue A, B, C, and the objective is always to get you to a D. So there's your D. However, there was an inside rally with a very nice movement up in the technicals. So that could have reignited the upside to say that maybe it's a C. I'm calling it a D for now. It's going to have to prove itself. And there's the weekly chart suggesting that 2400 was not taken out this week. 2398.16 was hit. This is going to be very interesting. Let me move the 120-minute chart out the way. This is leg C almost certainly today. Unless something spectacular happens, we're going to make a peak C in the S&P, peak D in the Dow. So I'm going to go to our first call as soon as I get back. There are a lot of things I want to look at here, but let's suffice to say I'm rather cautious. I have my foot hovering over the brake, off the accelerator. I'm looking at this and saying, I think we're in for the continuation of the consolidation, the Dow and the S&P, and I think cues are very close to a turn down. Basil Chapman, Tiger Positions Hour. Dow's down 35, S&P's down 4. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a lot of questions, but first I want to go to Jerry in the back bay. Jerry, how are you?
All right, I'm walking up to the Harvard Dental School on the cell phone.
Okay, very good.
I'd like to have the money that I'm going to spend there on my trading account. Anyway, Google.
Yes.
I'm thinking of selling it. I've noticed a pattern that when these stocks have a blow up, Google in particular, I've owned it since 600, and whenever it has a blow off like this on an earnings report, it tends sometimes in the next 2 to 3 months to go back down.
Okay, so let me do this. You might be a little bit swayed right now because you're on your way to the Harvard Dental School. So I've got this as a leg F to the upside in the daily. I've got it as a potential leg F in the weekly and a leg D in the monthly. But the technicals in the monthly chart are still very strong. The on-balance volume hasn't given me anything like a sell signal. And what I would say to you is I don't know how much of the position you have, but I don't see any reason why you wouldn't trim some of it right now. But I would not only trim it, I'd trim it to the extent that I'm saying to myself, whatever I take off, at least in my mind, I'd like to be able to dedicate that amount back into Google if it does one of two things. Let's just give it an absolute outside turnaround. This is the high, and it's the high for a long time this year. Could be maybe let's just imagine that it's the high for 2-3 months, right? What I would do is I would say the price it was trading at yesterday was 800 and in the 870 area. The 9-period moving average in the daily is at 868. I'm not sure what would give it any kind of gap down on Monday and leave an island reversal there. That, of course, would be the heads up to say, okay, that was it for the moment, at least for 6 weeks, and it should be pulling back. But what I would really do is this. I would dedicate the money that I take off into two parts. One is to go back to where it was at 867 or 870 yesterday. I don't care how sharp it's going to pull back. I would put that money back and say, wow, that was a 50-point, 60-point gift that it gave me. Wonderful. I'm taking my money off, and I'm going to put that part of that back. And the next I would have as an outlier, I would keep my core. I wouldn't even think of touching my call, because Google is one of the major 21st century companies in innovation, and whatever they're doing, they're spending a lot of, they're not afraid to spend money on research. Not all of it will pay off. What does pay off invariably pays off very big. And the other thing is, I would say, let's have a little bit of an outlier. Let's go to 838, between 842 and 828. I might not get that back. I might have to rethink it, but I would dedicate the rest of that portion that I take off to that level. So you've got two down moves, and if it goes up from here, my thinking is, even if it had to make an inverted V or a rectangle formation, at some point, a good part of this gap will be filled. So you'll have time to say, you know what, maybe I'm going to raise the entry price for that other position that I've just taken off and keep the low. You'll have time to think it through. But I don't see any reason why. It doesn't have to be today, but in the next day or so, you say, you know what, that was just a gift. And I mean, if you're looking at the monthly chart of Google, I could draw trend lines to say right where we are, there's a trend line resistance. All I can say is it's a fantastic stock. It's one of the leaders of this part of the 21st century. I don't want you to mess around at all, but definitely I would take something off and say, you know what, I'm going to divide that into two pieces. One part will be kind of where the gap was yesterday, where it was trading before the gap up, and the other one would be maybe 20 to 30 points lower. And let's just hold it and see what happens over a period of 3 months.
All right. Thanks a lot.
Hey,
Have
and
a good day.
congratulations for a tremendous buy. Have a great day. Good luck at the dentist.
All right. Thanks.
So folks, I'm so pleased we got to Google, but let me just quickly, I wanted to finish because I wanted to go through a couple of other things that I wanted to look at. Look at the QQQ series. Straight up, and every reason to be straight up. I mean, wonderful earnings, but there's a gap in the weekly chart. Now, a gap in the weekly chart is purely coincidental. Monday could have been Tuesday, and then there wouldn't have been a gap. What I'm really looking at is that I'm going to call this for now, I'm going to keep calling it a leg F. I have every reason to consider that there was an instant restart. It's called an unconventional instant restart, which says it could go a little higher, so that even if it was now in B, it could go C and D in the weekly chart, in the QQQ. But everything about the technicals is suggesting the stochastic, the relative strength, the M-shaped pattern in the weekly chart of the MACD. Everything is suggesting that unless at 94%, which is really good in the QQQ series daily chart, and the MACD is still expanding, unless the stochastic really pulls back to 87% over the next few days, because the Qs go from 135.90 right now down to about 134.90, 134.70. I have to say that I'm going to give it until Wednesday, because if the stochastic starts to flatten out, any pullback is going to be a minor pullback. And that's the reason why I would not, for Jerry that called about Google, that's what we were looking at, Alphabet, GOOG. Taking off something to reward yourself having held it and you're making a 50% profit, it just makes financial sense that you want to take something off. But that money, because it's such a powerful stock, I would, for him, the way he looks at portfolios, I would dedicate that money back again, even if you put it on the side for a while. That's number one. Number two is, if Google starts to give back on Monday or Tuesday, and even if it pulls back a little bit, it'll probably affect the QQQs somewhat. And if you're looking at the 120-minute chart of the Qs, I haven't got any real signal yet. So I don't want to mess around. I want to say that there's a divergence in the markets right now. You're talking about the Dow and the S&P kind of be working together as not being nearly as strong as the NASDAQ 100, the QQQ series. And if you look at the IWM, which was going to be the next thing I'm looking at, you'll see that it snuck above the previous high of 140.86 made in the 1st of March. And because this is a brand new buy mode, it was at peak F. I have to consider this is a peak C. Technically, you should go to a D. And that says to me that my Chapman Wave short-term trading gauge, that's the trend gauge, that's Richard Arms' gauge that I only use in a particular way, it says to me that is in play to maybe make a D, and that kind of coincides. If you're looking at the SMHs, which were down 1.04 at 79.97, also peak C, there could be a nominal new high over the next 2-3 days. So I don't want to discount that, especially since I've got the trend gauge flashing to say there should be a 9 to 11 point move maybe in the futures that should affect the cash index positively. But I am getting signs in weekly charts to say that they're getting rather toppy here and that we are starting to see some kind of a diminution in the strength that we had seen earlier on. Look at the way the MACD and stochastic are here in the SMHs. So when we get back, I'll look at the gold index, the GC. Gold is up 3. I'll discuss that. And I want to look at Dig and Dug. So I'll be looking at the crude oil, and I'll be right back. Basil Chapman, Dow's down 21, S&P's down 2.75. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive The Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, so we're back. What happened there? Whoops. That was interesting. Okay. So let's just finish this. Gold is up 2.5. Gold is under the 9-period exponential moving average of 1272. It's at 1268 right now, up 2. And it's really struggling hard. For the last 7 sessions, it's closed under the 9 EMA, made that peak G in the Chapman Stork Lake formation. I really do think it's going to test the high of peak E right there on the 4th of April, 1255.55. 0.50. That's my target for the downside. The 9-period moving average in the weekly is 1258.9. It's called 1259. So it's trying to consolidate here, but all I can say is that if there is a move, it has to actually go above 1283 to make a curve that says, ooh, turning the MACD and stochastic positive. At this point, they're both negative. So I think there's still a little more to go on the downside. If you look at the dollar index, which is trading at right now, dollar's up 3 cents at 99.11. Not great, but it's making this little cluster formation as the stochastic has gone from 10% to 11%. So it's trying to turn around. The MACD histogram is starting to improve. So the dollar, in fact, could have a little bit of a bounce. It's got a bounce today, actually, and it's not going. Probably it's not going to close above that strong trend line support, rising trend line support in the weekly chart. So let me quickly sum it up for these two. If the dollar starts to close in the 98.50s in the next between this afternoon and Monday, that's not going to be very good for the weekly chart at all. That would suggest that the gold has a chance to gain. It just doesn't take the opportunity to rally above the 1272 level of the 9-period moving average. But if both of them are acting poorly, that's suggesting to me that commodities is not quite the place to be at this particular time. Currencies are also just in a trading band. But let's see what happens on Monday. I'll give you the numbers again. Gold above 1273 is good. 1283 is what you really want to see. So, hey, maybe this is a stronger trend change to the upside. Gold below 1260 says that 1255 target that I've had for a little while, that's going to be in play. The dollar at this point at 99.10 needs to get not just to 99.40 above the 9-period moving average. It actually has to get to 99.80 to 100.20 to really say, hey, I'm holding that I'm trying to get above that trend line support, which I'm under, not looking good. So that's what we're looking at there. If I look at the EUR USD, euro dollar currency pair, it's made a peak C. I suspect because the MACD is holding very well, stochastic's at 87%. I think we will go above the high of the 26th of April for leg D to the euro, and then we'll have to see what happens. And the weekly chart has really improved. It has the arch formation, but remember, this is the technique that I teach about the second arch formation in a lowercase h that goes to a lowercase m. Just think visually. Once you take that out, but you're able to close above the left side low of importance, that's March of 2015, you can have a much stronger rally and make an even larger arch formation. So this is really important. Next week, let me put it this way, for the currencies, next week's going to be very important. This week has already been really important for other indices that I'm looking at, but the currencies, I think next week. Let's go to the TLT. TLT right now is trading. It's up. It's down 23 cents. It's got the same little cluster formation, and the MACD and stochastic are not good. I was asked yesterday afternoon. I wasn't able to do it because I was out. Dog. So about the dog, not the dog. Dog is not what we're looking at. We're looking at Doug. Not the dog, but the Doug. The Doug. And the person said they're looking, they might be wanting to buy the Doug. And I looked at it and I said, gee, leg D, MACD's okay, but not great. Stochastic's down at 73%. And then I looked at the weekly chart and I said, oh, and leg E. But then I looked at the MACD, which is very strong. I looked at the stochastic, which is very strong. And I said, well, maybe we should look at the DIG as well. So Doug is the bear side of the oil and gas index. And I'm looking at this and I'm saying, I think this person has an idea here that the monthly chart of DIG, the bullish side, let's go to the USO. USO is the same thing. The arch formation that goes from an H to a lowercase m. So I think that this person has a good idea. I think Doug, in fact, is actually acting very well. So I said I would do during my show, and we both agreed that we needed to have a day or so to see how it is holding. And what I'd said to him was, you know what? The 200-period moving average is like a magnet. It means that until it breaks away decisively, it's going to keep coming back. But every time it pulls back, it's going to come back to this line of 44.50, which is the 200-period moving average, exponential moving average. So Doug, the ultra-short oil and gas pro shares trading at 44.93, down 17 cents, is actually holding very well. and I'm not going to dissuade you. I'm just not sure this is the price that I would be buying the DUG. But at the same time, if it moves up, it's going to move up very quickly, then go through 46. So, wow, it's a tough decision. In, out, in, out, in, out. All right, I know exactly what I'm going to do. I'm going to say wait until an hour before the close today. And if you want, you can have a little nibble. That's all you want is just a nibble on the long side, buying this at 44.93. But if it pulls back and it goes to 40, if it breaks 44.30 by 4 o'clock, don't buy it. But if it's holding here, you want to just nibble it to get a start, to get a feel, to see whether or not crude oil, and it's oil and gas, of course, is going to falter. And everything about the technicals say this, it better rally right away because it's not looking good at all. Let's look at the NG, which is natural gas. Natural gas is a little bit better. Natural gas made a high right there of peak G. It's pulling back. Yeah, okay. Okay, DUG. Let's go back again. This is the ultra short DUG. Yeah, I'm going to stay with what I was saying before. You can just have a little nibble. It means you're vulnerable to overnight, to Sunday night. But I think it's an idea. Then I had a bunch of questions about XOM. Oh, and in the den as well, I had XOM. XOM, I email. Is it for the dividends? I'm saying no. I don't think it's worth the risk in ExxonMobil or Chevron. Right here, I could be so wrong in this. Maybe this is the perfect time at the lows to be buying, so you get a nice yield and you get a capital gain. I need another day or two. I'm just holding off. I'm saying I don't quite see it yet. I see the signs, but I don't see it yet to buy Chevron or Exxon as a dividend yield. Now, question in the den: if around 10 can spark, you'll see oil fly to the upside. I don't think it's going to happen in the next few days. Famous last words. I don't. That's all I'm looking at. I can't get into that kind of speculation. But yes, there's no question. If there's a real problem, crude oil will spike to the upside. I think we might be holding it off just for now. So that's it. Then the next thing I wanted to get to was the next question I had late yesterday was Starbucks. Now I've had this thing about Starbucks, and my contention has been that the high, the 64 round number high that was made October 2015, I had called that a potential hat-trick top for Starbucks. A fantastic company. I don't know how Schultz does it. He just knows how to market. He knows how to sell. He knows how to take 30 cents something other and sell it for $6. That's how he does it. But I think it's just I don't know. I'm a little negative on Starbucks. We'll do that when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So let me just finish this up with Starbucks. You see the way the MACD, this is the monthly chart. So daily, weekly, and it's only leg C in the weekly, but it's under the previous peak C minus. So you can, once the pattern starts to set in, you've got to be careful that it doesn't repeat. So I'm just watching that real closely. Most importantly, you see the way the MACD is attempting to turn here with the price moving up, gray A, gray B. Let's just make it gray A, gray B, so you know what I'm talking about. Under the previous high, that's why I make it gray. If it was already at a C and the technicals were good, I say, okay, I can start to change that to blue to say it's in a buy mode by itself. Gray. Okay. So what we're looking at here is that the stochastic has rallied, the MACD has rallied, but it hasn't crossed positive, and the on-balance volume is good. So the price action is commensurate with the technicals, but the MACD is way lower than it was at the high, and that says just be real careful that if Starbucks at A59.59 doesn't, if it starts by, let's just say next week, just give it the full week. If Starbucks breaks under 57, it doesn't have to close there. It just has to touch 56s. And all of a sudden, I'm willing to bet that you'll see the deterioration in the stochastic, which in the week, which is at 79%, slide down to about 77%, and the MACD will start to turn down a little bit. And all of a sudden, that monthly chart is going to suggest that you could get a deflection lower in that MACD, and the stochastic will go from the 54% level down to about the 46% level. And that's going to say, you know what, right shoulder failure, I'll be real careful. So the question, I'm not sure it was a question, it was more a statement. Let me see if I can find it, Starbucks. So Jamie says, hi Basil, if time permits, would you mind showing your wave count on Starbucks? I think I have it, but just want to compare it to your wave count. It's selling a bit after earnings today. That was last night. Thank you, Basil. I hope you had a great vacation. Yes, I did. I can't even remember what vacation. Yes, had a terrific vacation. Thank you. So I'm a little cautious. I think it's just going to get harder and harder and harder. And I think he's starting to have drinks in some of the places. I think it's wine. I'm not sure. I think the challenge now is just going to get bigger and bigger for Starbucks, and I think it's becoming a mature company. That's really what I'm saying. So I'd be a little careful if you're long and you're long from much lower down. I would say, you know what, start trimming a little bit off here, and if this pullback finds support and it goes down to the 58s, 57s, but out of the blue you looked and you say, oh my goodness, back at 61, I'm going to say to you, bravo to Schultz and bravo to, I think it's his name, Starbucks, SBUX trading at 59.59 down to $1.71. They are doing something fantastic. I don't know how a company can be that broad. So many, they distribute, they're everywhere and around the world. and still maintain this kind of strength. I just think it's getting mature. And therefore, I think it's a right shoulder fade. And I would not be surprised if that 64 high that we saw back in 2015, it takes a long, long time before it gets back there. Okay, so just be careful. If you are long, if you're short, stay short. I'd put a stop one penny above the high that was made yesterday, and that was at just under 62. Yeah, it was 61.94. 62.02, that would be my buy stop if you were short. Okay, but if you're long, congratulations, it's still a great company. I never go to, I don't drink coffee like that, so it's, and my wife doesn't like it. She loves Dunkin' Donuts. So we're real sophisticated when it comes to these things. Okay, so anyway, that's my assessment of Starbucks. And the next thing I want to do is I want to go to, oh, that was a question. I did the other ones. Yeah, and what was brought up, I got an email, and I think it's very good. Kevin had said, your comment last night with Tom about the weekly sell mode is so confusing as it was on or off within days. No, the sell mode has been in place since it went from a sell signal to a sell mode after the March 1st high. But that sell mode, I haven't changed the designation to a strong buy mode, to a buy signal, going to a buy mode until it goes to a new high. At this particular point, that's what I have to do. For me, I can change it, but I'm not going to change it. And I said 1 penny above the 21,169 high negates it, but then I have to start looking at a potential double top. So I'm keeping it in. I'm calling it a consolidation. I think that was clear. And what I said was that sell mode is the designation. It's not the prediction. It's what has been up until now. So is the Dow Weekly still in a sell mode? Yes, it is in a sell mode at this particular point. Even if there were some stocks that were looking good, that's the way I'm using this particular codification. I'm just trying to make it as simple as possible. So that was it. And he says, I'll guarantee when you say sell mode weekly, expectation is a long-term downtrend over weeks. I've tried to make it as clear as possible. It is a statement of fact, not a prediction. So I've never been sure how to qualify that, because I thought that was kind of, I don't know what to say. So that I'm making it clear. You go to a new high in the Dow, even though I have to change that to maybe a potential buy mode or buy signal or something, I'm also then going to be looking for a potential double top. Okay? So there's a lot that has to happen. I'm trying to be as clear as I can. Back of my mind is clear. I'm just trying to articulate as well as I can. If it's not, I'm sorry. I'm doing my best. Okay. So, yeah. Now let's get. So that was Starbucks. I wanted to get to that. I wanted to get to the next question, which was, Honeywell. So what does Bob say? Bob says, Honeywell, UTX, Boeing, ITA. Okay. So Honeywell. Oh, I haven't got it notated. It used to be A, B, C. This is leg D in the weekly and the monthly chart. This is leg A, B, C, D. Is that an E? E, maybe an F. It could have recycled. I'm going to take a little time over the weekend. I'll do it on Monday. All I can say right now, Honeywell has been an absolutely spectacular stock. I don't really see it as a short right now or anything like that. I've got leg A, leg B, leg C. Maybe it'll still make a D. I don't know. But in the meantime, it's looking very strong. But UTX is one of my Dow quartet. And what I've been saying is that it's just gone from 25, 23. It's just gone to leg D right now. And it's still, when I went through this over the last couple of days, I still have it in leg C in the weekly chart. So yes, you've got a couple of very important Dow and Dow type stocks. Fabulous action. Absolutely, I should have, of course, UTX is one of my Dow quartet. And it's breaking out of a resistance level in the monthly chart, leg C. Calling it leg C. It could be an alternate count G/C in the weekly, but it's so strong, I'm going to call it for C for now. And that's what I'm saying. We've got a real divergence between what's strong and what's not. Look at GE. Look at it, tried to rally today and it's failed again. This is a horrible action. So I hope I've dealt with that in a way that says you're looking at strong stocks getting stronger, weak stocks getting weaker. That's the characteristic of this market, and we might be seeing that with the Dow and the NASDAQ over the next few days going into Wednesday's close. Basil Chapman, Package Logistics out, Dow's down 32, S&P's down 4.5. We'll be right back, and I'll get to some of the other questions about Intel, etc., and some other stuff.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, so as we're about to wrap up the week, a question I had was, GT wants to know, Intel minus 4%, SOC Semiconductor, Index, is this like the year 2000? Well, I'd spoken with Tom last time, and I said that the ictus, the V-shaped reversal that we see in major down moves when everything comes together based on the fear factor, is different in the indices when you're looking at tops. And one of the reasons is that tops make the tops independent because they're in sectors that are going through earnings and all sorts of things that are derived from a much broader outlay of sector factors, so that you wouldn't get everything coming together at the top, because it doesn't always happen. It happens occasionally, but not always. But I don't think we're looking at the same thing as 2000. I don't see any of the exuberance right now. I see price to earnings very high. But you don't walk around hearing people at the bank like I still hear people at the bank talking about their mortgages and things on the phone, their cell phones. Yes, I do actually go to the bank. I like to go to the bank. Get out. That's the way I like to go. I like to go to the bank. But I don't hear them talking stocks at all. And I don't hear young people. You've got to hear the young people talking stocks before we get a major top. So it's very different. And not only that, PE ratios can actually continue higher for a while. So this is not the issue for me. It's my socio-political, the whole smorgasbord has to come together. Today for my subscribers, I showed them a golden, Peter in the United States sent it to me, the link, a golden Darth Vader mask, gold, being sold or auctioned for over $1 million. I mean, this is the era we're in, right? Okay, let's just get back to it. So didn't I do that before? SMHs? Yeah, SMH is down. I've got it as a peak C. It could fail here because it's really the weekly chart in a leg. I think I'm calling it a leg F. I don't see anything else I can call it. Just at this particular moment, could make it alternate count B. But just for now, I'm going to keep it as an F. Monthly leg C still very, very powerful. Leg C means you have to go the whole of May before you can make a P. But I do think that it's very toppy. SMHs, I think, are toppy. And at 90%, that's very good for the stochastic, but not if it immediately turns down. And within another 3 days, by Wednesday, stochastic's trading at about 83% or lower. That'll be a negative. So, yes, I think it's toppy. Maybe there's going to be one more bounce. But let me tell you, they are very extended here. And that includes Intel. Intel right now made a peak F/A, pullback. It's in a trading band for this moment, Intel, down 1.24. So just before we're going to wrap up, my opening calls, my very extensive newsletter, daily newsletter, where we have buys and sells. The two shorts that we had added today are both down. That's what you want. And the two longs are both up. That's kind of what you want as well. So, all right, let's just go through this VIX index. The question was, what about the VIX? VIX is rallying here from, it made a low 4 days ago, just above 10, and now it's trading at 11.13. I think next week the VIX becomes active. How active? I just don't know yet. I think over the weekend we'll see if the Trin gauge is going to work on Sunday night. Otherwise, there's a chance that we'll start to see real choppiness next week, and the VIX index becomes active and wide awake once again. So I'm going to leave it at that. On the day, what would I like to see? I'd actually like to see the Dow close down 53 points, the S&P close down 5.80, maybe 6.30, and the NASDAQ pull back. And that allows just one more pop to the upside, maybe next week, and then we'll see. But I am becoming much more cautious as we're looking at the markets right now. We'll see what happens. The day is young. Who knows? We might be up 30 in the Dow. We'll be back on Monday. Have a great weekend, everybody. Stay tuned. Great shows coming up. And thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.